You know what? We'll do this one. So this is a pair I really hate. Yeah, I don't like it. So I always do like a little backtest session on these boot camps, to be fair. Yeah, me too. It's a stupid pair. I don't know why anyone likes it. It's stupid. Anyway, so what I've done is gone back to as far as I can possibly go. And let's just check the 4-hour. Okay, so this is how I would approach the market if I was trading this pair at this current time. Okay, so let's start off with what we can see. So what we can see is we have the high, we have the low, which broke and create this new low. Okay, we have some sort of liquidity grab, but price doesn't seem to be wanting to push any lower. So on the 4-hour time frame, all we have is bearish intent, but we don't have confirmation of bearish trend because we haven't broken this low. So for me, I'm still thinking it's bullish from this time frame. Okay, let me just check the daily quickly. Yeah, it's just saying the same thing. So on the daily time frame, what we can see is price create this low, then we have this whole impulsive move, and now it's gone bullish. So on the daily time frame, we only have bullish intent. So where could price potentially be going? So what we have is we have a low, a new low, so break a structure which came from this one. Potentially we could have a reaction here, but I doubt it because I doubt it. It doesn't seem too strong. I'd rather use that one because of the previous mitigation play. And then we create this new low. So we have rule 1, rule 2 in this situation, but we also do have another break. So for me, because we have this bullish intent, potentially we can either look to buy this up to this POI potentially. Now, for me, I don't really look too far. I don't really look too far like this. I just follow what price is showing. Because the thing is, if I'm doing this, if I'm like going from time frame to time frame, what happens is I'm building to so many scenarios in my head, and then I get fully clouded and I have no idea what I'm doing. And it varies between people. If you're able to do that, then that's fair enough. But for me, I need to try keep it as simple as possible. Otherwise, I won't understand it. I won't understand what's going on. So because on the 4-hour, all we saw was bullish intent. Sorry, bearish intent. I'm just looking for. I'm just going to follow what's happening on the lower time frame. Let's go to the hourly because the 4-hour wasn't really giving me much. I don't have. If I go back to it, I don't have a 4-hour POI. But the only thing I'll be looking for is if price will come in. Price will be changing on time frame, changing to be bearish to look to break this low. But at the moment, it's still looking bullish for me. It's clearly not strong enough to break this low. So let's go to the hourly and see what is happening. What do you mean data point is unavailable? What? I'll use the 5 seconds to get there. Hold on a sec. It said data point is unavailable. I used the 5 seconds to even get there. So it should be available. That's very weird. I'll get back to where it was. Okay, so this the same point. Yeah, so we're back on the hourly. Wow. Okay, so let's see what is happening here. So let's look at current price. So price is, we have this low, we have this high, which has just been broken. And we have some sort of mitigation play happening here. Okay, so this is giving me, obviously we've got bullish intent and we're hopefully looking to go long from here, which supports the whole idea of what's actually happening on the higher time frame. So what I'm going to do is just mark this one out. You know what? This pair even moves disgusting. Right? It's just horrible. I don't know why I put myself through this torture. Right. So let's go to the lower time frame and see if there's an entry point, because what we have is break the structure and we're playing the first mitigation. Okay. Oh wait, I just realized it's spread time. So during spread, so during rollover, I don't know what time it is for you guys for you guys, to be fair, but is between the New York and Asian session where we have high spreads. We ideally won't trade that session. So let's go from the UK morning. So let's get to 7. Yeah, close on New York. Yeah. So we wouldn't trade that anyway. So let's go to here. And now let's try understand what's happening now. So let's go 15-minute potentially, because we've had the hourly reaction. Let's try follow what's going on. Why is it broken hourly structure again? It's broken hourly structure again, and we're having some sort of reaction here. Gosh, this is ugly, man. This is proper ugly. Okay, so I can't see anything of interest yet. Okay, so now what we see is that some sort of mitigation has happened here, but I don't know what is mitigated. It's mitigated something. And then now we've gone on to break structure. So at this point, we're probably trying to find where a suitable POI would be. If you have this sort of reaction and you have huge wicks, remember what I said in the first POI about the first day about the wicks, because technically the OB is here, right? But then we've had a lower time frame price come into it, okay, and then fly up. So for me, although I would mark this out as the POI, I would also mark out this wick. Now, I only do this when the wick is near the POI, because I assume that this is where the last selling was before the whole buy came into place at the extreme point. So for me, I'm assuming that this is, and this actually probably answers your question from yesterday in terms of what do you do about these tails coming back, right? So for me, that looks like there's some sort of lower time frame play. So I won't be surprised if price comes to mitigate here. But anyway, let's see what happens. Oh gosh, I moved too quick there. That's exactly where price reacted though. So I was correct. I can see now low time frame is a retrace. Yeah. So now let's see what's happening on the minute time frame. So the minute structure is not too great because this was the 15-minute high. So for me, the minute high is in that same place. So I wouldn't use the 1 minute time frame in this situation. I would go to, let's go 30 seconds and understand structure. I won't do an inception entry on this, but I will show you an example of one. Well, I don't know if it gives an entry or not. I'm just winging it, to be fair. So we'll see. But I guess it gives you a good example as to what actually happens. So the structure point that we need to break is here, right? So let's see if we break this structure, which it looks like we will. Oh, maybe not. Maybe not. What is this pair? This pair is disgusting. You signed up for this. You know what? I regret even doing this. There you go. So now we've had a break of structure. Where did it come from? It came from here, right? Now, some people feel a little bit uncomfortable having this much price below, but we need to be confident in the structure and we need to be confident in our strategy that this is where price broke that major structure, right? We don't need to worry about this because this is all minor. We don't need to worry too much. So now that we've had the first break, let's see what's happened. So this is going to be, if you wanted to, you can place an order from here, right? Let's place an order here, stop loss below, so we can do, I don't know, 1 pip on this one. Here's Euro Swiss francs, the spread's really high, so let's just say 2, okay? Let's say, actually, no, you know what? I'll be ballsy, I'll say 1. Let's see how that happens. Okay, so we have the first break, and bear in mind, this is entry point 1, so it's lower probability anyway, but we'll see what happens next. Okay, so now what we've done is we create a low and a new high. So now we have rule number 2. Now in this position, I wouldn't be looking to trade off the successful retrace in this example, because here prices to cluster together, and this is where instinct and like sort of your gut feeling comes into play. Because for me, I wouldn't feel comfortable trading that. It feels a bit weird that it's the middle of nowhere. I would be using, if I was going to trade off that, if I wanted to, I would use the inception entry. I wouldn't use our standard entry. I wouldn't place an order here. But for me, what this does is just confirms that our impulsive OB is probably the most ideal entry point. So let's see what happens. The only thing that will, oh gosh, I'm getting close. The only thing that will invalidate it is if price breaks this structure. If price goes on to break this low without mitigating this or this, we'll have to go up the time frame and reset the two rules. I'll explain a little bit more about that later on. But anyway, let's see if we are correct anyway. Okay, so we got a trigger. I got a trigger, mate. Wait a second. Wait a second. Hold on a sec. I don't know why I'm surprised. I just hate this pair. So let's go for a 1 to 10. I'll talk about targets shortly. But let's see if we do even hit a 1 to 10. This pair is so slow. Let me guess. Back.
Go. 9.9 down.
Let me guess. 9.9 and back down. Watch. I'll bet it doesn't. Maybe not. Okay, so we can hit a 1 to 10. So this pair, as you can see, is very ugly. And the only reason why I don't trade this pair is because I haven't had much success with it. I'm surprised this trade even worked out. I was hoping to show you guys a loss, but clearly price wants to support me now. But this basically shows the power of the two rules without any inception entry, right? The results are there, right? It just takes time to build that intuition, because for me, the intuition would be here, right? This is where it starts off. I did not use the 1 minute structure purely because of how far it is. And I'm assuming that there's some sort of lower time frame breaks here. Okay, that's the only reason why I went lower. So that's the first part of intuition, that it's going to take some time to build with chart time and experience. But once you gain that, you'll realize you'll be able to do this quite easily, right? Now that we've had confirmation of the two rules, I didn't look to go off this successive retrace. The whole reason being is because my gut didn't feel like I wanted to use it, although that is a valid entry point. But in terms of improving your probabilities, you're better off waiting for the impulsive OB. And now that we're in this trade, what do you do? So remember I said from the 4 hour, for the 4 hour, we're obviously looking bullish, right? And that whole daily picture, we're probably aiming for this. We're probably aiming for this. Okay, so for me, I've got no reason to close a trade now. But when we talk about trade management, I'll talk about taking partials. But generally, I take partials when price hits 10R, and I close half, secure 5R, and leave the rest to run. And then I take partials along with structure points. But anyway, we'll see where this price actually goes. Actually, let's have a look. Oh, to be fair, it's gone. Isn't it? Where does it go? How correct was I? Oh, damn. Do you see that?
Oh,
Are you watching it? It went to 1 to 67. I'll be happy with the 1 hour in the past. Yeah, so you can see like how easy it is to rack up. To be fair, you know how long this took though? Yeah, oh no, but 1 day is not too bad.
No.
Maybe my new favorite pair.
That was class. That was good.
So this is basically a backtesting session, but and it's a good one for you guys to come back to. Now, if I was going to do an inception entry, the annoying thing is obviously I've seen it now, but I don't know if there is an inception entry, but we can have a look. Let's go 30 seconds. I wouldn't count on that. I think 5R is also fine. Thing is, you know, if you look in the psychology section, you can see a screenshot of my effects book. Now, that shows you the power of closing 5R. Like I've been closing 5R consistently for 6-7 months, and it's incredible the power of compounding, because that 5R is going to be higher every time you win, because obviously you end up risking more, and you know you have you have to pay yourself. You bear in mind the market owes you nothing. Okay, the market does not owe you anything, even though we know how price should move and how price moves anyway, but it doesn't mean we're going to be correct 100% of the time. And it doesn't mean that our edge will always play out. You bear in mind it's an edge, right? I love to take a 1 to 100 full volume. I've never done that, to be fair. Actually, no. Have I? No, I've never done that. I don't know why I even thought about that. No, I've never done a 1 to 100. But anyway, let's see if there is an inception entry in here. So if I was going to do an inception entry, what I'll do is I would wait for price to come into the POI. So now that it's tapping into it, what I'm going to do is go to the 5-second time frame, and we're going to look to confirm again. So let's see what happens. So generally, we have our low here, which is just tapped in. Our high, because this little wick is closed above, our high is here. Let's see if it breaks. Maybe not. We create a new one. So a new low, we've got a high here. Let's get a breaker structure going. Okay, so we have a breaker structure here. So now that we have the first break, you can probably put an entry point here where the last sell is before the buy, because now we broke this structure. Let's see what happens next. Okay, so we create a new high. So what this gives us is 1 rule, 2 rule, okay? So me having this order, it makes sense, okay? Which we triggered now. Watch me get stopped out now. Oh, okay, so yeah, I would have stopped out. I would have got stopped out on this trade. So there you go. Yeah, I've managed to show you guys a loss. There you go. So let's move that out the way. However, this is what Nick was talking about on UJ. Although you price stopped you out on the first entry point, right? Does that mean you stopped looking? And the thing is, no. A lot of people stop looking at this point, and they're sort of like, and I went too far there. They sort of like start questioning whether the strategy works and start losing their heads and so on. The thing is, you have to be confident in what you're doing, right? As long as you're following the 2 rules, and as long as you're following order flow, you're good. And if price hasn't violated your POI, you don't need to worry. Okay, don't worry too much about that. But anyway, let's see what happens here. So now we created a low. We have a high then a low being created. We have a break. I don't know if I wouldn't have entered that, to be fair. Done, went too far, sorry. So now we had this breaker structure. So let me mark this out. So I realize I'm thinking in my head. I haven't seen this pair before in a while. So the reason why I'm saying this is the low is because we have this candle being closing above this one. So we made a high, and then we obviously, this candle made a low as well because it closed below. So although this made the low, our marked low is going to be this wick, okay? So this also creates the high as well. So that's why it's a bit confusing. So not only has this made a low, it's also made a high. So that's rule 1. And then what price is done, this will take some time to get used to understanding this type of structure, but I wouldn't suggest jumping to the second time frame just yet. I think get comfortable with the higher time frames first, and then slowly transition over. But anyway, when you have this, we create the breaker structure. Price comes back to mitigate this. Okay, so we have mitigation play, and then we went on break structure again, right? Yeah, it's gonna be able to take it. Yeah, to be fair, I started using second time frame in January, and that was after a year of doing smart money concepts. And before that, I was obviously had 5 years using another mechanical strategy. But anyway, we've broken structure here, right? And I realized I draw so much. If anything is too messy, by the way, just let me know. I will get rid of everything. I draw a lot. But anyway, what we can see is we created a high. Where did the high come from? It came from most likely this candle, which is the OB. If you want to refine it, you can refine it to probably these. But for me, I think if I can get a 1 pip stop from this open, I will be happy. Okay. And it even covers the low, so I'm happy. So I'll place my order there, and we'll see what happens now. Yeah, same thing, triggered. Now, in terms of going to break even, now generally you would go to break even when you break your structure point and so on, right? But for me, I don't think I want to go break even just yet, because this candle looks a bit too clean to be true. Because it led to this break of structure, I want to see this candle be mitigated first and then go break even. So I'm not too comfortable yet to go break even. But this is already a 1-to-1 in the space of what? When did it trigger? It triggered here. In the space of 2 minutes. To be fair, 1-to-1 doesn't seem too impressive anymore, but Anyway, well, so I'm not going to break even just yet, just purely because of that candle there. Let me close, get rid of all my brushes. So let's see how price plays out. Obviously, we know it does go bullish in the end, but whether I get stopped out here, I don't know. So price is mitigating now. I'm still not obviously still not gonna go break even. Oh gosh, what's it doing now? What is it? Look at this. Hey, watch this thing. Look what it's done. Okay, there we go. So we got a successful entry and price is gone. So I'm not too worried, to be fair. But yeah, the only reason I held because of that candle needs to be mitigated for me. And then price obviously continued, and then we know that it went to wherever it went to, 60 something R, wherever it was. So we're potentially aiming for, as I said, is that candle there as the last bearish POI, which is another 30 pips. That's quite a nice nice one to show, to be honest. Price does that sometimes. Yeah, yeah, that was a very nice one to show, actually. I'm quite happy with that.